All right. Recorded is rolling. I appreciate everybody joining on a Thursday night. It is the 22nd of September, 2022. How's everybody doing? Hope everybody's doing good. We're still looking for downside on our higher time frames as far as Bitcoin and ETH goes. We saw some downside today. We're starting to see some upside, some possible reversal come into play. But before I wanted to get into everything as far as what we're looking for on the technical analysis side, we're going to do a lot of mental analysis work today, talking about how we can use both our institutional concepts and place them in our mentality as well as in our day to day lives, right? With regular habits and certain instances where we can start to better ourselves, right? So, we're going to talk about why rules are a thing, why they're even important in trading. We'll talk about a little bit of examples as well, how rules can be a good and a bad thing, right? And then we'll also talk about the difference between ineffective time management and effective time management related to trading specifically. Now, this relates to day to day life as well. If you have an ineffective time management, right, if you don't manage your time right, then you have certain instances where you have to reschedule certain things over and over again that might be hurting your business, whatever it is, right? Certain instances like that to where we need to effectively manage our time. Now we're going to talk about how we can relate this to trading specifically as well. We're also going to talk about how we can utilize previous losses as a positive factor to our analysis, to always be looking ahead, right? Always growing in a type of way, no matter what. And then at the end, we'll get into our Bitcoin and Ethereum outlook for the weekend. So with this started, we're just going to get into rules, why they're even important, and what I'm looking for. So definitely a lot of talking. But let's just jump right into it. So, rules. What are they? Why are they important? And why is it something that I even want to trade with? Well, to start this off from a basic logical point understanding, right? As a trader, we understand that this is a business, right? So you are the business owner when you are trading. You own your own business. You are paying yourself through the business that you have created, right? Through the capital that you have created or hold, right? In your portfolio, that's what's going to go into now your business, right? You are investing in your business, in yourself. So as a business owner, as somebody who owns a business, somebody who wants to grow and capitalize on the business, right? Rules need to be set in place. Why? This is just from my logical standpoint. If you are an employee, or sorry, if you are an employer, you only want employees who are going to follow your rules, right? To allow your business to profit the most, right? In the biggest ways. So with that being said, right, understanding that we need to create that business type of mentality within ourselves, that we need to be that business person for ourselves, is now going to allow us to be very, very focused and look for our step by step rules when they're coming into play. So, what this means is, right, you are both the employee and the employer. So, if you don't offer rules and set rules for yourself as the employer, to the employee, which is also yourself, right, then you will not be able to sustain your business, which is in turn your portfolio. Um, this is going to allow now comfortability and profitability as well when we are creating that business type mentality, right? So rules are going to be very, very important. And just a logical example as to how this can work. Let's say you are an airplane pilot, right? Or let's say you're a co-pilot and you go up to the airplane and you're ready to fly, and the veteran pilot next to you, right? He's been flying for 20 to 30 years. The veteran pilot next to you looks at you, flips one switch, two switches, and then says, "We're ready for takeoff." What are you going to do? You're going to look at him and say, "No, this thing's going to crash. You only got two things flipped, right? You didn't get everything ready. Every single step needs to be in place, right, in order for this to fly safely. If not, then this is going to take off and crash, right?" And now that creates that same type of mentality. If we're not focusing and working on every single step of analysis up until the point of entry, right? Then if we're skipping steps, we're being lazy, right? Then that's going to crash, right? Our plane is going to crash. Our portfolio is going to begin to crash. It's the same type of mentality. Every single step of analysis that we do needs to be in place based off of our rules that we have to allow for that profitability and comfortability. Because then what does that bring, right? If you're doing the same thing over and over again, then that brings repetition, okay? And so once you have repetition, you now gain confidence because you are constantly creating these scenarios, right? These scenarios are coming into play. You are constantly banking on these scenarios, and now you have become confident in your style of analysis, how you are looking to trade. Very, very important when we set rules for ourselves. Um, both the technical side and most importantly the psychological side, right? Telling yourself, I'm only going to trade 1 to 2 trades a day, right? I'm not going to make more than that a day. I don't know if I said this last time, but there's this interview that I saw. I think it's Alex GFX on YouTube, something like that. He was talking to Raja Banks, dude who traded with Q Banks. But anyway, he was talking about his come up, saying how he was trading and saying when he was coming up, right, he didn't have a trader or a mentor on the trading side. Instead, he had a virtual psychologist. So he would go to the psychologist for all of his needs, his wants, whatever he had on his mind, right? And the psychologist doesn't understand the money investing psychology, but he does understand psychology. And he tells him, he says, the human mind can only physically make 1 to 2 emotional decisions a day. Okay. So investing in itself is an emotional decision itself, right? So if you're making more than 3 to 4 trades a day, you have now become an irrational type of thought process, right? It has become irrational now that, let's say you've lost 2 to 3 trades in a row, and now all of a sudden you're just in a I got to make it back mentality, right? I lost however many it was. I have to make this back. I have to make this back. I have to make this back. And then it gets you in a losing cycle, right? And then all of a sudden, your portfolio is just going to crash and burn from there. That is just a cold hard truth of how trading works, how it is, right? And what's going to happen. I don't want to sit here and say, oh, you don't have to do that or just don't do this, right? No, this is what it is. If you do not manage risk, if you do not sustain your account through that confidence and ability to look for that, then you are not going to be able to maintain then your portfolio. So rules, very, very, very important. We'll talk about examples as well when we get into it, but just some quick examples, right, of technical rules I'm looking for are impulsive moves on a break of structure. So I say, okay, what am I looking for my rules? Market structure, right? An impulsive move that breaks that structure point, and then I'm looking for the confirmation to then take it to the next week high or the week low. 3 steps, right? 3 steps of analysis to come up until that point. Once that is created and once that is found, right, and once that is shown on the charts, once it is actually shown to you, then you have the ability to enter or walk away from the charts, right? This is the system that we've created, system that we have studied, right, countless hours over and over again. We understand that the technical analysis works, right? It's there. Now it's just up to us as traders to get that psychology down, to be able to enter those trades, to be able to talk about our journals, right, our losses, to be able to then gain positives out of that, right? So rules are going to be very, very, very important. So next, I want to talk about the difference between ineffective time management and effective time management related to trading specifically. We've talked about this before, but I kind of wanted to go in depth with it today. We did it a long, long time ago, so we might just reiterate the whole thing. But understanding what time effectiveness is and how it relates to trading is going to be huge, right? Huge to our analysis. And the reasoning from this is to understand that time is money, right? Your time is money. So if you are wasting your time, right, being lazy, doing whatever you want to do during the week, then you are going to result in lazy results, right? You're not going to get what you want to get out of that by not putting in the work. That's just real life. That's just how it is, right? So let's talk about how time is money works with trading now. So with with ineffective time management and effective time management, there's 2 things I look for. So personally, what this means is how much work are you doing up until the point of entry, right? How long are you on the charts, managing your time as far as that goes? And then how quickly do you profit after you are in your trade, right? So what this means is an ineffective time management trader, right? So let's just get rid of this right here. We'll put these down. We'll put down ineffective, and then we'll put down effective as well. And then we will put down effective. Let's just copy this, clone that, bring this over here. All right, so we have ineffective and we have effective, right? What does ineffective mean? What does effective mean? Ineffective means lazy, right? That is the most simple answer that I can bring it out to you guys as far as what I'm looking for when I talk about an ineffective trader. Meaning, if I am ineffective, right? Let's say I'm on a 4-hour chart. Let's draw this out, right? This is a 4-hour trend that's in play. we get a break to the upside, and then we get a break of structure to the downside, right? So the ineffective understanding within this point in time would be to enter limits after this move to the downside. And the reasoning from that, and the reason I'm going to say this is a 4-hour chart, right? So obviously your risk is going to be much greater than it would be on a lower time frame. Meaning when I look to play effective time management, right? When I wait for days, weeks sometimes for these setups to come into play so I can have, right, every single time frame within alignment. When this happens, there are certain instances where I'm not taking a trade for a week, right? Certain instances where I'm not taking a trade for 2 days, 3 days, 4 days. But what this does is now allow me to gain much profit much quicker, meaning that when I'm effectively managing my time, instead of having a situation to where I'm shorting this, right, off of limits at the top of this supply zone after this move to the downside, right? And I end up getting a 4-to-1, 2-to-1, 3-to-1 on a higher time frame, right? Meaning this is days of work coming into play for a 4-to-1, right? If I effectively manage my time, so I wait for the 4-hour to break structure to the downside. Let's draw it over here now. Right, we have a move up, and then the structure break to the downside, and then the move to the downside. So now if I effectively wait for my time, right, and I wait for the confirmation within this zone on lower time frames, instead of utilizing now this zone, right, this entire zone as an area for me to possibly catch a 4-to-1 on a higher time frame, a 4-hour time frame. Instead now, right, I can wait for the actually, let's delete this. I can now wait for the confirmation on a lower time frame from bias to switch from bullish to then bearish, right? And then once we get that structure break to the downside, I can now effectively risk a lot less than I could before because of the supply that was now introduced on this. So let's draw this out as red. Right, so my lower time frame trend is here. I get a break of structure to the downside. I have my area of supply. So now instead, right, of waiting or just using the 4-hour, now I'm using the 4-hour and the 1-hour. All I did was add a time frame, right? And now all of a sudden I have the ability to risk much less and make much more much sooner, right, on this trade right here than I am over here overall because of the risk that I have applied, right? So we need to understand that when this happens and when we get up to these points, right, to where I'm on my higher time frames to then lower time frames, we can get in these instances and we can get in these situations to now where I can take profit much sooner, right? Because my risk is much less within these areas, right? My 4-to-1 has come much sooner in half the time than it did on this. So now we see where the effective time management and ineffective time management comes into play. So in half the time, I have profited what I profited over here just by waiting for an hourly trend shift, for a confirmation of that zone, right? And waiting for lower time frames. So now we can see into play how the fractal nature of the markets, how we can begin to now scale down and allow this, right, to give us much more profitability much quicker, right? And allow us to still hold for the higher time frame trend overall. And effective time management is going to look like this. Effective is going to look like this. And let's talk about a quick example as well. I'm going to go over to ETH. All right, we can use this chart right here. Actually, let's just bring it up to over here. All right, so we look at this structure, daily structure, right? And let's say we waited for a daily break of structure to the upside after mitigation of the institutional candle, right? That caused that. So first you have your institutional candle right here. Last sell before that buy, right? We can see we came and mitigated that, and then we came back down. We broke structure to the upside here. And now we're looking for that final continuation, right? You could even call it over here as well after we created the higher low. So we came up, made a higher high, came up, made a higher low, broke structure to the upside, and now your zone is right here, right? So an ineffective time management and what that would mean within this certain scenario is, let's say you got this break to the upside right here, and then you set limits, right, on this zone. A long position on this zone, right, stops underneath. targeting these areas up here. 7-to-1 trade, 3.70% stop loss. Is this a wrong trade? No, it's not a wrong trade. There's nothing wrong with this trade, right? We're just trying to talk about how time effectiveness works and what this means to me, right? So a 7-to-1 trade, let's talk about the time that it took, roughly 19 days, right? Up until that point, for you to make 7 times what you risked. That's what this looks like for a higher time frame, right? So now if we waited for the confirmation from just a daily to then a 4-hour, right, within these areas, if we waited for that 4-hour break of structure to the upside with impulse within our zone, right, we can see that price came down into this area. We created a high, we created a low, and then we broke that structure point to the upside on the 4-hour, right? So I now have my candle before candle on the 4-hour versus the daily, right, that I can look to take a trade off of. So instead of now this entire zone that I made a 7-to-1 within 20 days, we can take this much more refined, right, into areas like this. Bring this back here, bring this stop loss up underneath the zone or even underneath the low. That's completely fine as well. Now you can see just taking it from now a daily to a 4-hour. So waiting for the daily to switch and then the 4-hour to switch has netted us twice the amount of profitability, right? In the time that the other one did. So waiting for all this drawdown, right, on a daily chart is not what we want to see. Instead, we want that instant green, right? As traders, something we want to see over and over again. So if we wait for the confirmation within our zones from higher time frames to lower time frames, we can now gain much more profitability, right? From literally a daily to a 4-hour, we switched to one time frame. We have doubled the amount of profitability in the same amount of time that we have gained just by waiting, right? So if we waited for this one, actually, much sooner. Yeah, 12 days. So 13 days, I have made double. I shaved off a week of what I had before. I have made double just by waiting for a daily and a 4-hour to switch. Now we can see where that time effectiveness comes into play and what it means, right? So let's now look at the 1-hour. The 4 to the 1 within these areas as well. Right, we can see we get our liquidation rate to the downside. We get a move up here, and then we just get the full break after this move to the upside right here. This candle that was broken right here. So at this point, it was on our actually lower time frames that we would be looking for these. You can see we created a rally-based rally here and then broke another structure point to the upside. Let's even go on lower time frames. We can even try 61. I'll throw it on replay mode real quick as well too, so it doesn't do this to me every single time. Bring it back right there. Perfect. Right, just by doing refinement, just by going on lower time frames and understanding, okay, where could I look to possibly take this, right? Institutional candle to the downside that broke this structure point to the upside. Internally, we can look on the 15-minute. Watch the structure as we come into these areas, right? We see we create a high, we create a low, we break that structure point to the upside. We break that double structure point to the upside. We leave that fair value gap after that mitigation, right, of this zone right here. So we liquidated lows. Show this out right here. Right, liquidated these lows to the downside. After we did that, right, we broke structure to the upside, left that fair value gap as well as that institutional candle. Came down and mitigated that, and now all of a sudden, right, I have done refinement even more. And my 15 to 1 within 9 days, right, has now become a 51 to 1 from a a daily to hourly to 15-minute at this point in time. Daily to 4-hour to 15-minute at this point in time, right? That trade that was originally a 7 to 1, I would have made 7 times what I risked, right, has become a 51 to 1. I can now make 50 times what I risked within this certain time, right? And let's look at the time frame as well. If you waited up until this point in time, up until entry, right, again, 12 days, making literally 3 to 4 times what you would have made, right, just by utilizing that daily and that 4-hour. Is it wrong to utilize the daily and the 4-hour? No, right? Not at all. You can still find those higher time frame plays. Actually, the higher time frame charts, right, are going to hold the narrative overall. So what I recommend for a lot of smart money concept traders or anyone who's tried to get into the space, and try to trade these higher time frame to lower time frame concepts, is to take it at step by step. Meaning, once you're comfortable with the daily and the 4 hour, right, then go to the 1 hour. Then use the daily, the 4 hour, and the 1 hour, right? And then once you're comfortable with the 1 hour, then use the daily, 4 hour, 1 hour, 15 minute, right? Start to add it on as you gain comfortability. A lot of big issue that I see a lot of smart money traders do, a lot of the times, is they'll find their immediate 4 hour zone, right? Let's say it was this one right here, and then once we immediately come into that zone, they're on the 1 minute, right? We can't show it, but they're on the 1 minute once we pop into that zone trying to catch the bottom, right? And then that's going to bring you into the same exact mentality that you were in before if you were trying to catch bottoms, catch tops, or whatever mentality you were in when you were unprofitable, right? It'll bring you back to that same exact mentality because you're like, well, doesn't this work, right? I see this other dude doing 1 minute entries on 4 hour time frames. How does this like not work? How am I not being able to catch this, right? It's not there yet. So we need to wait for our higher time frames to then switch to our lower time frames. All time frames are now within harmony, and then once that occurs, right, we can now enter our trades and holding for the higher time frames. So understanding ineffective and effective time management is going to be huge. Your time is money. So if we can sit there and utilize patience, and now I can create my time, right, to be, let's talk about where we hit that 7-to-1 within this trade right here, right? The daily chart. Where did the 7-to-1 occur? Here. Now you guys can see, right? I don't need this entire move to the upside. I do not need this at all. That's how that effective time management works. This is within what? You can put it out right here as well. Entries here, 7-to-1 hit within 1 4-hour candle, right? That's you've made 7 times what you risked within 1 4-hour candle because you waited for the confirmation from a daily to a 15-minute. That was all, right? And this can go down to even the 1 minute. So now I just need this candle or this candle. And there are certain instances where you will see these 10%, right, 20% portfolio gainers, these trades that are occurring, that if you go on a daily or a 4 hour, you won't even be able to see it within here, right? They'll be within this candle here, or maybe within this candle here, or within this candle here. These opportunities are presentable, and because price is fractal, you can find it from your higher time frames to your lower time frames. Meaning, let's say you're a scalp trader, right? Try your hourly as your daily chart, and then use 15-minute and 5-minute confirmation as your entries, right? Only holding for the hourly range, the hourly trend that you are playing within. Can't hold for the 4 hour, right? Or the daily, only holding for that hourly at that point in time. So there are scenarios like that, right? Where we can get into trades and still catch intradays through this model, right? And through what we are looking at. But understanding that ineffective time management is simply laziness, right, is going to be huge in your trading game. If I just decided, like before, like we were talking about, to see the daily break a structure to the upside and just say, oh, it's good, right? I'll just set limits and enter my trade and just hold, you know? I gained 7-to-1 profitability. It wasn't a bad trade. Still a profitable trade, right? Very, very profitable trade. 7-to-1s are really nice. But within 19 days. So it took me 19 days to make 7 times what I had risked. Whereas here, it took me 4 hours to make 7 times what I had risked. And then overall, it took me 12 days, right? We shaved off a week and a day to make 53-to-1, right? So this is what that effective and ineffective time management means within trading specifically. So make it effective, right, to your time. Make it effective to how you look to play, how you look to grab your R&R, right? If there are certain scenarios, like let's say we were back on the 1 hour, right, and this was a 15-to-1 right here, or it was a 10-to-1 at these highs right here, or something like that, right? And you like the R&R, go ahead and take it. There's nothing telling you no, right? As far as the rules go, if the rules are in place, the R&R is there. Why are you not in that trade? It's a game of profitability or probabilities, right? It's a math game. So now if we can use multiple probabilities, right, through the higher time frames to the lower time frames, Wyckoff, S&D, market structure, we can now allow ourselves to gain much more in much less time, right? Because now that I've waited for a week for this play to come to fruition, I have made my 7 to 1 within minutes, right? Within that 1 4-hour candle that we talked about, 7 to 1 is done. I can take profit on a 7 to 1 or even half of that, right? Catch my 3 to 1, leave that, right? Because I now have my profit for the day, even the week, if that's 2.5%, a little 3 to 1. And then let it run. And now all of a sudden I've gained all this profitability, right? And I've still covered myself and I've still covered my losses. I don't have to hold for this move to the upside, right? I only had to hold for this move right here, right? This is where we can get that time effectiveness and how it makes sense, right? So now I want to kind of talk about how we can use previous losses as positive factors to our analysis, as far as what we're looking for, right? What it even means when a loss is considered bad, right? Because a lot of the times, every single trader um, that is out there, when you first get into this game, right, you want to be right. And when you're wrong, it's discouraging and it's a slap in the face, right? You sit there, you're like, I don't know what I'm doing, I don't know what I'm talking about, what is happening, right? How do I look to trade? Am I even trading right? And then you get this whole overwhelming mindset that you don't want to look to achieve through trading. We want to keep our minds as clear as possible, and that can come through right meditation, right repetition, practice, everything that we have been talking about throughout these past months. All of these sessions that we have done are the tools that are needed, right, to be able to bring that. But now it's just that mindset from yourself. So how can we apply a positive mindset now to our analysis, right? Let's say within this certain scenario, or even let's just use a most previous example, something similar. Something down here. Actually, let's go to Bitcoin. Bitcoin was a pretty good example. Let's go to replay mode. All right, so now let's sit here and say, okay, how could I use a loss as a possible positive factor to my analysis? Let's say I set limits or just decided to enter off this, right, fair value gap fill after a possible break of structure to the upside here internally, and I entered here holding for this weak high up here, right? So let's just bring back the replay mode. We'll bring it back to right here. I'm in my trade, right, to the upside. Either here, here, whatever it is, doesn't matter. We could just put it down right here. Holding for the weak high. Now, the first issue, actually, let's not even talk about that right now, right? Let's just play this out. So if we're sitting here, right, trying to hold for the weak high, my 7 to 1, pretty good trade, right? Something we're looking for, but at this point in time, right, not everything is there quite yet. But understanding that if I sit here now and let this play out, right, and then I end up getting stopped out of my trade, and I sit back and I go back, and instead of getting discouraged and saying, well, this doesn't work, right? Market structure, supply and demand, all this smart money concept stuff, it doesn't work. But then I go back and I say, okay, well, how can I use this as a positive factor now? How can I take my negative whatever 2% L that it was? How can I take that and apply it to something positive, right? So now if I go back and I say, okay, why did I get stopped out? Let's just sit here and look at these candlesticks and say, okay, this is where we had mitigated off of, right? If we didn't have this before, we say, okay, this is where we mitigated, and then we created supply when we actually broke structure to the downside here, came back up, filled that supply, right? We can see this on H4, and then continued to the downside. So now I sit back and I say, oh, okay, I learned something. I learned that until I have my daily structure broken to the upside, then I'm not looking for longs yet. Why would I be looking for longs within this scenario, right? It's still bearish. Lower high, lower low, or sorry, lower high, lower low, lower high, lower low, right? That's as simple as it is as far as the market structure goes and what we are looking at. So if I sit here and say, I take this loss as a lesson instead of I take this loss as a loss, I'm bad, market sucks, whatever it is, right? Just start blaming things. Then that's not going to allow you any growth because now you're just angry and frustrated, right? And just want to quit every time you go onto the charts and take a loss, right? And it doesn't retain any type of good psychology, good mentality, good anything that we want to keep within ourselves as a trader, right? But now if I can go back and say, oh, I needed my daily first before my 4 hour switched, right? And then I look at the volume too. I can say, oh, look at that, right? No volume on this push to the upside. So that was not a real quote unquote break of structure, right? This was just a higher high that was created to push up into these areas of supply to then mitigate that supply, break structure to the downside, introduce new supply that we can see with this market maker M right here, double break of structure to the downside, and then continuation to the downside overall. Now I can say, oh, it was bearish, right? I was proven wrong, and this is why. And now, when that next instance comes up, right, and I have another redistribution scenario where we get another M, right, we can see that we broke structure once, broke it twice, candle before that lied right here. Once that happens, I'll now be prepared instead of looking for longs because they're not there yet. I'll be looking for shorts, right? And now all of a sudden, because I took that one L on that trade, right, to the downside, before, once the situation comes into play again, because I lost 2%, right, I've now gained 7%. So was that 2% really something to get frustrated over? I don't think so, right? Because that place still came into play. You were able to learn something and able to profit off of it just as well, right? This is what we want to see as far as what it means to have that positive mindset within trading. It happens, losses happen, stop outs happen, but if you want to go back and look and figure out why you got stopped out. And that's going to change your view on and your perspective and your entire view on trading and these charts, the candlesticks, right? If you go back and say, wait, why did I get stopped out? That's all you have to do. Ask yourself. Ask yourself, wait, why did price react right here? Instead of saying, oh, it just made a big move to the downside or focusing on too far left, whatever it is, right? Just say, hey, why did price mitigate that right there? Or why did price go there? And then go back in time, look look on the candlesticks, right? Look at the market structure, look at your rules, see if that applies to why that mitigated a certain area or why that touched a certain area. And then now that can allow you, right, to gain that confidence and that knowledge of what you're looking for every single time when you are looking to trade. So that is just something quick little innuendo as far as how we can use losses for good, because losses are a part of this game. It's how it is. It's how it works. It's how trading works. If losses weren't a thing, then the market would not be the market. The market would not be available. It would not be here. So if we understand that losses are a part of the game and can now use losses as a positive factor to our analysis, to our studies, to what we are looking for, then we can now gain profitability instead of getting frustrated and saying this doesn't work. I was just on the wrong side, right? Because I wasn't effectively managing my time. I wasn't effectively looking at the charts from my perspective that I needed to be at that point in time, right? Waiting for the daily break of structure is what I mean when I talk about that within this scenario. So now instead of saying, oh, it's wrong or blaming it on something else or doing anything like that, right? Blaming it on your peers, whatever it is. Instead of doing that, I can go back and say, oh, I was wrong, right? And if you can now sit there and if you can look in the mirror and tell yourself that you are wrong, right? Or tell somebody else that you are wrong, that you are already ahead. You are already ahead. And that's just from a psychological standpoint, right? This entire world is full of a lot of people who don't want to take accountability for certain scenarios, right? So they would rather blame it on something else, place it on something else. It was the indicator, it was this, it was that, it was this, it was that, right? But at the end of the day, you were just lazy enough to not look at the charts from a higher time frame to lower time frame perspective. That was all. You didn't effectively manage your time. You didn't go in, go look deep, follow that market structure, understand where we are mitigating certain areas. Instead, you wanted price to go up, so you entered along, right? That's not how this works. We need to understand that once it's there, and that's when we can look to take our trade and look to capitalize off of it from that. So with like I said, that was just a little quick innuendo as far as how we can utilize previous losses as a positive factor to our analysis, right? So if I lost here, now the next time that this comes into play, I'll see the supply introduction over the demand introduction, right? And I'll understand that, oh, this demand that was created right here, its job was to just push up into these highs right here, mitigate this area of supply, and then make the move to the downside, right? This is where we can start to gain lessons, because now I know what my strengths and weaknesses are. I can go back and say, oh, my weakness was not waiting for the daily trend, right? My weakness was impatience at this point in time. So now I can start to work on that, and I can say, hey, I can work on my patience. So now that I'm working on my patience, right, and that comes into play, and now that I'm staying patient for that move to the upside or not, right, now I have gained profitability to understand where the chart is going to move to next. So like I said before, just a quick little thing on losses, how that can be positive to our analysis. And now with that being said, I want to get into the sentiment stream, what we're looking for the weekend. But before I do that, is there any questions or anything like that that anyone has as far as what we have talked about? Any comments, anything like that? I'll take a look on stream chat. I don't think there's anything right now, but feel free to do that while I go ahead and get some TA done. But we're going to go ahead and look through this right now. So Bitcoin, again, still showing bearish structure overall. We are starting to have a volume spike down at these lows right here. We talked about our 17.5 liquidity goal overall that we are looking for as far as those monthly equal lows. Remember, our monthly structure is still bearish, so we are assuming down until proven otherwise, right? Monthly bearish. We can go to our weekly. Weekly still bearish as well. Yes, this low caused this high, but until we see that structure break with impulse, right, then we can't look to enter these positions. Something I will say that is very, very interesting on Bitcoin, the weekly especially, is our volume that we have been seeing down at these lows, right? This is very, very good. Personally, what I want to see. And the reasoning from this is this entire down move, if we can see, had not that much volume on the weekly chart, right? We started to gain volume here. And this is what I mean by this, right? So if I draw my premium and discount from this low to cause this high, this area of rally-based rally, right? This area of demand that caused this high overall. Let's go ahead and put this down. Or even from this low overall to this high, right? And I draw this out as premium and discount. And I sit here and say, oh, on the move to the downside, right, on our first distribution following November, that liquidity rate to the down or upside, then break a structure to the downside, supply mitigation continuation. Following that, right, we have received no volume to the downside, which is what I personally love to see, right? It might seem like we've been shitting whatever it is, right? But we have to remember this is a weekly chart. And on a weekly chart, we're not getting a lot of volume to the downside. And now that we are in discount, right, starting to manipulate lows, starting to leave some highs, which is very, very good as far as accumulative behavior. What I want to see down in discount, down at these areas of discount for Bitcoin. Most volume I've ever seen. And isn't it coincidental how now they're talking about Biden, right, signing the papers for regulation, all this SEC stuff, and crypto is now starting to be big, right? All these things. The U.S. is now super interested in crypto. You might look at it, but this is something that is not coincidental to me, right? Something that was written in. Oh, all of a sudden now we have all of this volume in the market. Now that they're talking about regulation, right? Now that they're talking about this, now that they're starting to actually make moves within discount. We have to remember the manipulation factor of it. So while retail is saying crypto is going to zero, it looks to me as the U.S. is capitulating at these lows, right? Now we can understand where that manipulation comes into play. A lot of instances like this happening, right? ADA, you can see hard forks and certain drops, right? News drops, everything that comes out like that, and you sit there and say, oh, okay, this could be bad, right? This is bad news. So you short it, and then it takes you out of your position. You're like, well, what just happened? Well, we have to understand, right? Again, the manipulation where it comes into play that we aren't thinking like the 90%. As an institutional trader, we are not thinking using the mindset that a quote unquote retail trader would use, meaning that if 90% of retail sees that the news was bad, right? So they're all shorting, and I can see it on the charts based off of the equal highs, right, that are presented. Then I now have that ability to say, oh, okay, I'm targeting those because I have bullish structure, right? I'm against retail, I'm against the 90%. I'm with the institutions, the 1 to 10%, right, that are making the most on these moves to the downside, to these bigger moves to the upside, right? I am making with them, we are following them, and instead not trying to follow the all-around retail bias, because that now gets us in that following, that pattern mindset, to not allow for any type of independence overall within our trading game and our trading style. And as traders, that's exactly what we want to have. We want to have that trading style that us ourselves can comprehend no matter where we're at, right? I personally, right, don't want to have to have a certain indicator up or something that I pay for in a sense, right, to have to gain profitability. I want to be able to learn, to grow, to capitalize off of that, so then I won't need, right, this and that. I'll just need candlesticks. I'll just need premium to discount. And at this point in time, right, it gets to the point to where you recognize this area without even having to put this up, right? So you can look at this now and say, okay, we're in discount, manipulating lows, leaving some lows as well. We would like to see that 17.5 liquidity goal tapped, right, mitigated, and then a break of structure to the upside following that. You can begin to now see it on the charts, and now that you have just pure candlestick price action, that's all you need. You don't need no $200 indicator a month, right? You don't need this and that, all this noise on your chart. Instead, now you all you have to do is just open up a candlestick chart, and you can now get a sense of direction and a sense of where you are looking to take that. Because something too that I've mentioned with indicators specifically, and I'll just show a quick example with Bitcoin, 4 hour, and we'll throw on the Playbit EMA. Right, so Bitcoin's Playbit EMA. I personally do not think anything is wrong with utilizing the EMA. Nothing at all. If it is used right, then it is completely fine, right? Meaning that if you enter a trade right here, exit a trade right here, was that a wrong trade? No, it was a profitable trade if you had your stops underneath this low, these lows, whatever it was, right? But let's understand why I personally didn't like indicators as from a limiting sense, right? And the meaning that I say when I say they're limiting is for a 200 EMA specifically, it's recommended those higher time frame charts, right? Daily charts, 4 hour charts, for how they are going to hit as far as these moves to the upside or the downside. But let's talk about how many chances I got within this point in time as a EMA trader, just a 200 EMA trader, right? Could have got a chance here. Could have got a trade here. Could have possibly gotten a trade here, maybe from breakdown. Maybe a trade here to the upside. Not too sure. I know with the EMA, it's break and retest. As far as how you would look to play this, right? Something like this, where you break the EMA and then you retest it. But let's just talk about this. 1, 2, possibly 3. I'm not even gonna count these actually. Let's just take these off because we're playing the 4 hours. So break and retest. So 1, 2, 3. We can even say 4 right here. 4 chances, right, to get into this trade at this point in time. One, right, trade to the upside, another trade to the upside didn't go as planned. Maybe if you're targeting this high, whatever it was. But anyway, let's just look at this, right? We have 4 chances to get into this chart at this point in time within 46 days. Okay, so almost 2 months, month and a half roughly. I have only 4 chances to get into this trade, right? And let's say I was wrong on this trade, to the upside right here, right? Or let's say it was I was wrong on this trade to the upside right here, and I tried to hold it to this high. Instead, I was stopped out of my position, right? I now only have 2 trades that I could gain possible profitability off of. But this is limiting to me, meaning I have to wait until I get an EMA crossover for me to enter a position. But let's look at this from a smart money perspective now. Just looking at the 4 hour, right? I can go down, see, okay, I had a break of structure to the upside right here on H4. Right, it created a fair value gap as well. We can see that imbalance that is in place. We'll just draw it from this low to this high right here. I now have an opportunity right here to sell where retail is looking to buy. Right? Do we now see how that's starting to make sense and how we can see it come into play? Another thing with liquidity too. A lot of traders use the EMA, 200 EMA. A lot of traders are going to use it on those higher time frames as well. So let's sit back and say, oh, okay, so where's I stopped out of my position at this point in time? And as a retail trader, how does this make sense? We understand from an institutional perspective, right, from this high to this low, is our premium and discount of our range that we have created. So I'm buying in discount, looking to sell in premium, while retail is looking to buy. Let's take off this. Right, and as we are coming into premium, what do we talk about as smart money traders? What do we want to look for, right? The manipulation of highs as we leave lows within premium overall, right? We can see we rated the highs, broke structure to the downside, and then left lows. Let's take a look at these lows right here. right? Clean equal lows that we can see from a candlestick perspective, from just the price action that I can see right here. I can say, oh, okay, we came up into discount, right? Rated highs, broke structure to the downside, left the lows, the reason to fuel the liquidity to move to the downside. And once we broke once, twice, we had the supply mitigation continuation to the downside. Now let's throw this on. We understand this to be retail stop losses, right? Retail liquidity underneath these lows. Let's throw this on. Isn't that interesting, right? Now we can see where that comes into play and how that can be even shown with indicators. So I could throw this indicator on and use it as a liquidity indicator, right? It doesn't have to be something that I would use as a crossover because, again, I only got 4 chances. Here, I could have waited for the break here, break a structure to the upside here. I have 1 chance here, 2 chances here. Wait for the liquidation rate, break a structure here, 3 chances here to get into longs. Once I get up into longs, right, break a structure once, we get the second break here, institutional candle is here. I have another short entry, right, another short entry here. So that's already 6 that I've had within just this one move to the upside. And then move to the downside as well. Another break of structure to the upside. I have my candle before, right, as well as my fair value gap within here. Another opportunity, that's 7 that I have gained. And this is just a 4-hour chart, remember, within 31 days. So we talked about 49 days that we had 4 opportunities on a 4-hour chart to play this. But for Bitcoin, right, as far as an institutional perspective, we had 7 opportunities within roughly 10 less days, right? So we can already see how, again, time effectiveness comes into play from a quote-unquote retail perspective, because if I were to just wait for crossovers, then I have less opportunities available to me, right? If I were to just wait for crossovers, am I even in a trade this entire time, right? From April 22nd to May 22nd or 28th, right? Am I even in a trade if I'm playing the EMA? Nope, right? Because I'm waiting for the crossover or the rejection, whatever it is. We have another opportunity here, right? And obviously here and here. But we can see now how the EMA comes into play as far as liquidity works. We can even look at it here. Our 3 drives distribution that we talked about. Remember the push up 1, 2, and then our final 3 pushes. What it does, right, is create that retail liquidity to the downside, that sell side liquidity as it is manipulating highs, right, taking short traders out of trades. Now we can throw in the EMA and say, oh, I see exactly where all that liquidity was, right, where those stop losses were underneath. I can take off that and also look at this and say, oh, I can see the equal lows, right, that were presented. I can take away the EMA, and I can see that myself, right, as we are building up into these areas. I can go to a higher time frame chart, a daily, 3-day, bring this over here, and you can see that liquidity as we're building up, right? And then the 2 EMA, right, was just 200 EMA was just confirming that. So we can now see it with candlesticks. We can see it with price action. And we can see that coming into play, right? But from a retail perspective, we don't want to get caught in situations to where you are limiting yourself. And that's what I thought it was, right? That's what I personally took it as, is I was limiting myself, limiting my opportunity, right, for profitability. Because again, that was a 4-hour chart that I was showing you over here with all the opportunities that we had. And you can bring that down time frame to time frame to time frame, and now the profitability opportunity has now 2, 3, 4, 5 times, right, within these certain scenarios like this. So very, very important as far as what I'm looking for when I'm looking to take trades is my time effectiveness there, right? Do I like the R from this move to this move right here? Are all my rules coming into play? If they're not coming into play, then why are you even in the trade, right? Goes back to that surfer analogy. If there's no waves, then why are you trying to surf? If you and your buddies got your surfboards, came out to the beach, got everything ready, and you're sitting there and there's no waves, are you going to go out there and surf? No, because you physically can't surf because there are 0 waves, right? So if there are 0 waves or 0 opportunities available to us based off of our set of rules, set of what we are looking to play, right, then why are we entering the trade? That's gambling. That is strictly gambling at that point in time. We need to have our set of rules in place. If they are not in place, right, then we will look to capitalize upon using, right, our rules of psychology as well as technical analysis. Psychology is a huge one when we are looking to take these trading in general, right? A huge one. 80 to 90% of your how you were looking to trade, right? I personally believe it as um, literally 90%. And the reasoning for that is I believe anyone can learn the technicals. I think you could sit there for 2 to 3 months and really sit down and get the nitty gritty and learn those technicals and make it make sense, right? But it's the traders who now have the psychology to continuously use those technicals and use their rules and continuously not sway from them, right? If they have a 1 to 2 loss day max, if they lose 2 times in a day, then they're out of their trade. Maybe it played it out, right? Maybe it played out all the way, and maybe you could have made a lot of money on that trade or whatever it was. But we have to let that go. We have to leave it behind because this is our set of rules. This is what we are looking for every time, and if it is not shown, if it isn't there, then why are we in the trade, right? That's as simple as it is. But yeah, again, super, super, super healthy psychology stream. Thank you to everyone who literally sat here and listened to me ramble over and over again, right? About these factors. Why are even rules important, right? Talking about effective and ineffective time management, all things that we have talked about before, right? This is just repetition, just getting it concrete stuck into our brains, into our minds, getting it wired into our minds to where we have that robot mentality to where we are at the charts, right? Yes, we got one impulsive move that broke structure. Yes, we got the confirmation of the zone. Yes, we got the Wyckoff right within. So now I'm in my trade. Perfect, right? Good to go. Walk away from the charts. Why is anything else wrong, right? Now that the waves are present, you are surfing the waves. If the waves aren't present, don't surf the waves. That's as simple as possible. And that comes into session times as well. If you are sitting at the charts for 8 to 9 hours a day, right? And let's say you made some money in the first half of the day, but then the second half of the day, right, you started to fall off. Maybe you ended up red on the day. What was the point? What was the point of sitting there at the charts for 9 hours a day if you are losing money, right? Um, think about it from a worker's perspective, right? You have not made any money during those hours. During 8 hours, right? You have made zero money. Um, instead, right? Those people out there at McDonald's just made more than you within those 8 hours, right? Because you didn't effectively manage your time. Instead, you decided to enter because it was 12 o'clock in the afternoon. It was lunchtime, or maybe it was spread hour, whatever it is. You thought it was going to do something, or you wanted to see something, so you decided to enter your trade, right? This is very, very important and something that us as traders need to get into because there are certain instances too where we'll get overconfident, right? There will be 2, 3, 4 weeks, maybe even a month, 2 months that we're just hitting every single trade over and over again, right? And you get this sense of confidence that you know exactly what you're looking at, you know what the market's going to do next, and then you start to predict, right? And then it brings you back exactly to where you were before because now all of a sudden you're stopped out, or you lose a lot of money on a certain position, and then you sit there and say, "Oh, I'm wrong. I did this wrong. I did that wrong." When at the end of the day, all you were was one, impatient, right? And two, you wanted to have that come into fruition. You were trying to create something that was simply not there, right? Again, with time effectiveness, if you have a 4 hour chart and a demand zone is there, right, and it comes into that demand zone, why are you on the 1 minute? We need to wait for the 4 hour, right, to shift. We need to wait for the 1 hour to shift. We need to wait for the 15, 5, so on, right? And then I'm on the 1 minute. I'm on the 1 minute and the lower time frames of the least amount of possible. This is something that a lot of smart money traders do not understand because they see people out there with those super high R&Rs and they're like, "Oh, are you always on the 1 minute?" Whatever it is, right? No, I'm on the 1 minute and the seconds the least amount of time as possible. Um, because why am I on the 15 second if my 1 minute trend hasn't even shifted yet? Why am I on the 1 minute if my 5 minute trend hasn't even shifted yet? We understand that our higher time frames are going to hold the narrative overall. Yes, our lower time frames make up our higher time frames, but until our lower time frames switch, why am I even worried about the lower time frames, right? So there are a lot of instances where you might even see lessons post stuff like that where I won't post the lower time frames because it's not needed. The trend isn't there. It's still coming into fruition, right? So set that narrative, set your goals for yourself, write down your losses, really, really journal. Because if once I guarantee you, once you journal, your trading career is going to take off because now you know exactly what your strengths are, you know exactly what your weaknesses are, you know how much you can produce, you know how quickly you can produce it, and now you have everything categorized in a step-by-step analysis, right? Step-by-step rule book for yourself to then enter or exit your trade and manage risk, right? And your psychology. But just all in all, right? Again, thank you guys for just popping out, listening to me ramble about everything. Trying to better yourselves as traders, right? On this Thursday night. It's a lot. It's a lot. But the psychology is what's going to bring you above the rest. The psychology is what's going to put you on the top. The psychology is what's going to bring you above your peers, right? If you can stick to it, stick to your plan, and not sway your bias until you are proven wrong, is when you are going to really gain that profitability. So again, thank you everybody who had made it, who had popped out. That was pretty much all I had for you guys today. On Sunday, we will be getting into our intro to SMC session 5. This one's going to be very exciting as we're going to do our higher time frame to lower time frame entry. Now that we have talked about everything that we look for up until that point, I'll literally do a daily to a 1 minute, maybe even seconds entry if I can find one. But with that being said, again, thanks to everybody who had popped out. This was recorded. Is there any questions or anything like that before I go? Collins asked me what were the vital steps before entering a trade again. So personally, what I look for, and I'm actually just going to pull up my rules real quick. Let me just copy and paste these in 1 second. Once I can find this in my little Discord. Here we go. Copy image. All right, let's just, we'll bring this up here. Paste that down. So this is what my personal rules look like. I have my rules and my psychology. So I have a technical end and I have a psychological end, right? Let's go to replay mode to get this bar out of here. Right, and let's understand what this means. We talked about what we are looking for. Let's talk about the psychological side. We could just skim through this real quick. But this is what I am looking for, right? For my steps to enter, confirm, trade, this is my technical side, what I'm looking for on the charts visually, what is coming into fruition, right? What I'm looking to play. And then for my psychological side, this is how I can keep myself disciplined and keep myself on the right side of the trend 100% of the time, right? Never chase a move, no fear of missing out, no fear under distress, right? I actually might even do a stream just explaining these rules for you guys because this is very important, I believe, as far as your growth as a trader. Another one, market is 80% continuations, 20% reversals. Why are you always trying to catch a top and a bottom? You should just follow the trend, right? Never trade against the trend goes with the 80% and the 20%, right? Never over leverage. Increased risk due to loss equals gambling. So if you decide to throw more in a trade because you got to make back what you lost, right, then you're gambling. Follow proper risk management. Don't trade for the action. You're trading to make money. You're not trading to be the best. You're not trading to be that guy, right? At the end of the day, nobody cares if that's as simple as it is. If they're not making money, right, they're not gonna care. So don't trade for the action. Always steps and confirmations for both the employee and the employer. Therefore, rules must be established and followed promptly. Another thing that we talked about. Parkside Jay said, thank you so much. I love your lessons. Appreciate you, brother. Basic question, but are these lessons on YouTube? Yes, they are on YouTube. They were pinned in lessons. I can go ahead and send out that link as well. I have them all in a playlist, both the Intro to SMC series and then our institutional analysis series, which is just every Tuesday and Thursday. But yes, under lessons, I can only seem to catch them live. Yeah, they will be pinned underneath the lessons. If you can't find the playlist, then let me know, and I'll just post it tonight anyway. But yeah, you all must have this. You must have something like this. Write it down, right? Go write your rules down. Go write your technical rules. Go write your psychological rules down. And then you'll start to see how you're going to start to add more based off of your experiences, based off of how you like to trade, right? And then you can now start to hone in on a style, hone in on an analysis, and make it work for you, right? Make it that job that you want it to be. But yes, sir, Parkside J, I'll have that up for YouTube as well. Is there any other questions or anything like that? Before I head out here, I'll give it about a minute, 2 minutes. No problem, Cons. Thank you, brother. And yes, I'll look to pin it. I'll add it And thank you, brother. Thank you for the feedback. That's huge. Something huge with these series, with these analogies, and just me sitting up here talking to you guys. If it's not helping, then I don't want to do it. That's just as simple as it is. I want to sit here and give you guys some information, some knowledge that you can actually take, actually look to apply, and actually look to better yourselves with. So again, thank you guys for everybody who had popped out. Thank you for sitting here listening to me literally rant. Um, Thank you, IRB. Appreciate everybody popping out again, and I will catch you all later. Feel free to ask me any questions or anything like that. Just add me in chat. But yeah, peace out, guys.
As a kid, I was a fan of Yu-Gi-Oh. That's
Yo,
why I
don't
pull
get
cards
licked.
on these
You
stupid
heard?
hoes. Don't
Do
get
not
licked.
get
If I
licked.
Don't pull a
damn,
silent. Don't pull a silent and get licked. Trying to fucking short the bottom and long the top. That's my boy Silent. That's what he be doing.
Silence. That's why he stays silent. You already know, man.